How do spread betting providers work out their prices, and how transparent is the process?
Well, spread betting providers ultimately have to work off the price in the underlying market because they're not in the business of making a market themselves. I mean, they're not a market maker in the way that a bank is a market maker in a particular interest rate swap or something like that. So ultimately, everything that the spread betting provider offers is going to settle to something on which there's an underlying price. So it makes sense for them to set their spread either side of that underlying market bid and offer. In terms of transparency, I mean, now that everything is really on the internet, prices are available, charts are available, it's difficult for a spread better to go out there and offer a price which is wildly different from what the underlying price is, because you've got an instant arbitrage. Whereas before, the spread might have covered arbitrages between two different companies' prices in the daily FTSE. That's not the case anymore. You're not really going to get these kind of price differentials, so it's going to be impossible that prices diverge to the extent where you can buy one and sell one. Buy one here, sell another company's there, and actually make an instant profit. I mean, even in out-of-hours trading, it's kind of rare that happens.
What are the obvious and subtle costs of spread betting?
The obvious cost is the spread, which is transparent and there for you to see. Now, different companies operate in different ways. Some have fixed spreads. Others have spreads which will vary depending on what's going on in the underlying market to some extent. And that can also differ in terms of one company might offer fixed spreads on some products but variable spreads on others. So it's worth having a look at that and seeing how all their products are priced. But the other thing, of course, is now that we see rolling bets being sort of like one of the main products. So there aren't many things that you can't get a rolling bet on. Now, a rolling bet, like a CFD, is something that you pay funding for if you're going long on a daily basis. Now, it used to be that you also received funding if you went short. But the very fact that we have zero-bound interest rates is that's not going to happen. You don't receive anything for being short, and in fact some providers even still charge you for being short or long. So just have a look at that and sort of do ask about this funding element. It sounds a bit complicated if you're new to it, but it's really worth having a look in because it's important to see how you're being charged. Because what you'll do is if you have got positions running on any day, you'll have your cash balance in there and you'll see that cash balance generally, it's going to be slightly falling every day because every day that you hold a position open, you're going to be charged for that on a rolling product.
What makes the perfect spread betting or CFD broker from a client's perspective?
Yeah, this is an interesting one, isn't it? I mean, you've got a lot of choice now on the surface. It looks like you've got a lot of choice of providers out there. Perhaps a little less than you may have had a few years ago because you've had a little bit of consolidation within the industry. You've got to look at a lot of the companies that are out there providing spread betting, CFD, FX. It might be a white label of someone else. So have a look at the small print and see who what's driving a particular platform. But what are you looking at in terms of the perfect provider? Well, the very obvious ones and the ones that we can all see straight away is sort of the range of products, the spreads. So that's the direct cost to you, the dealing spread. What's the cost of funding? That's something that is not so obvious sometimes, but it's something you've got to consider because like the spread, it's a charge to you. What are the dealing platforms like? So what are they offering there? Is there a sort of any kind of delay in prices? How easy are the deal tickets to use? I mean, I know they sound like silly little things, but they can matter if you want to sort of get out of a trade in a hurry. What about the ancillary? What about some things like a charting package? What are the charts like? I mean, it's all very well saying, yeah, we've got a charting package, but some are good and some are absolutely rotten, to tell the truth. So you've got to have a look at that because if charts are important to you, that might influence your choice of provider. And then when I talk about charting packages, I think about dealing, drawing tools, technical indicators. News feed. Do you need a news feed? If you do, then you want to have if you want to have a look and see, well, what kind of free news feeds are the providers giving you? Because again, some of them can be pretty poor and delayed. Others can be very comprehensive. Also, research and analysis. A lot of companies now will have their own strategists who will talk you through charts, tell you where support and resistance is, offer market commentary. Do you want that? So there's all those things to look at. But I think over and above, the most important thing is to consider the financial stability of your spread betting provider. How solid do you think they are? It's just like having a bank, putting your money with a bank. Again, it's a bit of a cliche, but what do you want? Return on capital or return of your capital? So what I'm saying is, if things do go bad, are you going to be able to get your money back? And it's the same with dealing with anybody, isn't it? And I think but it's still something you have to consider, especially when we're talking about financial markets.